Ladies and gentlemen, the market being in a bad position is no longer a hidden reality. It's no longer controversial. It's simply a fact. If we look at Bitcoin from a long-term perspective, we can see it's dropped from $126,000 all the way down to $80,000. Yes, it's seeing a small rally right now. And one of the reasons it's rallying is because it's retesting the 2-week chart, 50 EMA, the 50 exponential moving average, as well as the 1-week chart Gaussian channel center line, which is one of the most important indicators in Bitcoin's entire history. But the critical fact right now is that actually we're stuck between the center line of that Gaussian channel and the lower line of that Gaussian channel, which is a very bad place historically to be stuck in, and generally is suggestive of further downside price action to come. So even though we have local support here, I'm not convinced at all that this has led to anything positive. I think that at this point, Bitcoin is still in significant danger. And actually, I think the traditional markets, the DXY and upcoming interest rates decisions actually reflect that reality. So we'll look into traditional markets today. In the first half of the video, in the second half of the video, we'll focus on the more macro scale. And of course, we'll discuss what Bitcoin needs to do to get back in a good position. Just to kind of summarize before we even dive into the video, my position on Bitcoin has been one of caution since about $120,000. I maintain that position of caution, not quite suggesting it's completely over, it's doom and gloom yet. I think we do still have glimmers of hope, but those glimmers are dramatically outnumbered by the bearish arguments at this point. So if I had to guess, I would say this is a bear market, and that's something I have guessed for quite a long time now. So before we get into it, let's check out the Bitunix Exchange. Guys, everyone needs a place to buy and sell cryptocurrency. If you're involved in crypto, not only do you need to buy and sell, you also need to hold, you need to be able to transact your cryptocurrency. That's the purpose of an exchange. And of course, exchanges get hacked all the time. They lose their customers' funds or misuse their customer funds all of the time. There's big controversy around that in cryptocurrency. So you need to be on a safer exchange. You need to be on an exchange that's not extorting you on fees. And that's why I choose Bitunix. Not only is it global, not only is it non-KYC, but it's low in fees, and it's historically been very, very safe. Not a single security breach has ever happened on Bitunix, and it's been on the market through 2 entire cycles. So check it out with my link down below. I use it personally for good reason, and I suggest you do so as well. My link is down there. You'll get a 15% lifetime trading fee discount exclusively with that link. I appreciate you guys using it if you're interested. It's in the pinned comment and description, and let's get into the content. I think that always focusing on Bitcoin can somewhat distort your view on the bigger picture. The reality is Bitcoin does move cyclically, and although Bitcoin's cycle at this point does suggest we're in a bear market, we can't only focus on Bitcoin. We have to focus on things like the macroeconomy, because the macroeconomy is the underlying driving force of all financial markets, including that of cryptocurrency. The cycle on Bitcoin only exists because of cycles that exist in the macroeconomy, such as presidential cycles, such as the 18.6-year real estate economic cycle. And a good way of measuring what's going on in the macroeconomy is looking at the DXY, the strength of the US dollar against other currencies. This chart is reverse correlated to Bitcoin. When this chart goes upwards, Bitcoin is generally going downwards. If you follow my cursor here and take a look, we can see in the 2017 bull market for Bitcoin, basically the most exciting bull market in cryptocurrency history. We saw altcoins go ballistic. We saw the DXY going downwards. During the bear market that followed, the DXY was trending upwards. During the 2021 bull market, the DXY was going downwards once again. During the 2022 bear market, the DXY was going upwards once again. And during this bull market, which has been occurring since the bottom in 2022, we can see the DXY is significantly downwards. Once again, even since the local top on Bitcoin that happened in October, the DXY has been bouncing. So this chart going upwards is a bad thing. Now, some people might look at this chart and think, okay, we're at resistance. You can see this red resistance box, and they might think, okay, we're going to go downwards for here on the DXY and hence upwards for Bitcoin. The reason why this is faulted logic is because we do have resistance there on the DXY, but we also have a much bigger support zone that it's just recently retested that stems all the way back to 2008 during the global financial crisis. It is not broken since 2008. It's almost 2 decades old. We've just retested that zone, and that zone is much more important. That white line is much more important and much stronger as an indicator for what the DXY will do next than a simple red resistance box, which only goes back to 2020. So at this point, point, actually, the DXY looks quite bad in the sense that it looks good and hence it looks bad for Bitcoin, is what I'm saying. Again, the reason why I haven't thrown out all bullish arguments, the reason why I'm not sitting here and saying that we're absolutely certainly in a bear market, the reason why I use the word cautious and probably in a bear market is because things like this resistance zone on the DXY haven't actually broken yet. Yes, I can look at this support line and think we're going to bounce here in the DXY and hence drop on Bitcoin due to pretty sound logic and reasoning in my view, but it hasn't actually happened yet. The validations haven't actually fully occurred yet. The same can be said about the S&P 500. Let's go ahead and take a look at the SPX, which is just a chart for the S&P 500. And we can see a very similar thing kind of forming. The S&P 500 has a bit of a habit of basically running a little bit longer than Bitcoin does, okay? In 2021, it ran an extra couple of months before topping out in January 2022, while Bitcoin topped out in November 2021. It seems to be doing that again. If we are going to be following what happened last time, and if this actually is the bull market top, we can expect the S&P 500 to make a new high here before crashing downwards in maybe later this month or next month. So it's not abnormal to see the S&P 500 pushing towards its all-time highs once again. It even happened back here in February 2025 when Bitcoin started correcting downwards. The S&P 500 remained elevated for a shorter period of time and then crashed downwards and followed. So we look at something like the S&P 500, we look at something like the DXY, and what we see are charts that look like they are supporting Bitcoin's regular cycle, look like they are supporting the idea that Bitcoin is in a bear market, but actually haven't seen the full confirmations of that just quite yet. Now, I'm bearish, and if I had to choose, I would say that Bitcoin is in a bear market, and I would have said that back at 120,000. In fact, I did say that Bitcoin was probably in a bear market even at that point. But I'm not, again, fully convinced that these bullish arguments have evaporated quite yet. Every day I look at the charts, the situation looks worse and worse and worse. And we very much are at the brink of the complete annihilation of any resemblance of a bullish argument, even within this dead cat bounce. I do think it's a dead cat bounce at this point. We look at something like the Gaussian channel on the weekly chart, the be-all, end-all, pretty much, when it comes to Bitcoin macro indicators. This is the Bitcoin macro indicator, as far as I'm concerned. We look at the center line of the Gaussian channel, and we observe that every time we move through that center line, we move through the entire channel in the direction we came from. This has happened time and time again, moving up through the center line, moving through the Gaussian channel in the direction we came from into a bull market, moving down through the center line, moving into a bear market, over and over and over again. 100% success rates, never failed. And at this point, we have, unfortunately, moved through the center line. Again, pointing to one of the reasons why I remain cautious, bearish, whatever you want to call it, okay? The reason why I haven't fully thrown out every single resemblance of a bullish argument, once again, is because we haven't actually moved through the entire Gaussian. Yes, we've moved through the center line. Yes, we are clamped between the lower bound line and the center line itself. Yes, this does look like a dead cat bounce that is rejecting from the center line at this point, but we haven't actually collapsed through it at this point. We look at something like the 2-week chart RSI, and we can see a validation of the same point I just made. We look at, for example, this triangle formation on the 2-week chart. We can go back and show you so much more on the 2-week chart RSI, but I've shown it so many times on this YouTube channel. I'll just focus on this triangle for now. This triangle goes right backwards to the middle of 2023. It's a clear momentum triangle. We broke it to the downside, again, indicating that we should be cautious or even bearish on this market, obviously. But moving forward, and let me just flip the screen around just so I can get the indicator up, we can look at something like the 50-week exponential moving average, or the 2-week chart 50 exponential moving average, and we see a glimmer of hope there. We see that level holding for support, previously a quite important indicator that has been tested on multiple occasions, even during the dead cat bounce in 2022. So again, just the mix matching of the two arguments. On one hand, we have clear signs of the situation worsening at a time in which the cycle expects the top to be in. On the other hand, we haven't completely collapsed below everything there is yet. And that is supported on the Bitcoin charts and also supported on traditional markets. So this video might sound like a bit of a middle grounding, and I promise you it's not. I'm going to reach a firm conclusion right now while looking at the cyclical charts and tell you what I'm personally doing and what I think the best move is given all of this information. Showing this chart on the device I'm currently on is a bit of a clusterfest, but I'm just going to show you anyways. This is the 4-year cycle chart. You can see the date range trends clearly outlined there, and you can see those trends, the color of those trends, and the writing there is color coded to the date range measurements I have on the screen. This 4-year cycle brings us to a suspected top in October 2025 and a suspected bottom in October 2026. After the local rejections we saw at 126,000, there is firm reason to believe that the 4-year cycle could very well be playing out again, and hence firm reason to be cautious. That's the main reason I have been cautious. And I think that just because Bitcoin has glimmers of support here, it doesn't mean we can throw out the regular 4-year cycle argument, given this is the basis of all Bitcoin price action since 2012. So to conclude the video, yes, it is true that everything has not been lost, but it is also true that things are being lost day by day, and the situation looks worse day by day, and this is all as expected as per the cyclical trends. So we can expect it to continue getting worse day by day. Right? Just because it hasn't actually eventuated yet, it doesn't mean it's not likely to happen. I do think at this point that the 4-year cycle is the likely scenario. I do think we will follow the 4-year cycle because that's what's happening so far. And in order for me to be convinced that's wrong, we need to see something convincing that it is wrong. And at that point, as I mentioned in a prior video, that would be, in my view, a break above something like $102,000, maybe something like $96,000. This is where the next macro resistance zones are. If we just go ahead and get a pen, without going too deep into it, you can look at my last video if you want a full analysis of this situation. There is resistance. There is a neckline of resistance around that 100K zone, which acted as resistance here, support here again, and looks like it might even act as resistance once again here. Getting above that is the first step in the right direction to changing the status quo. Okay, at this point, the status quo, which is the 4-year cycle, is very much in play. And at this point, nothing has changed. And so we can assume things will continue to not change, which would involve Bitcoin continuing to drop, even though we have local support and even though there are glimmers of hope. Glimmers of hope don't mean anything unless they actually shine. not to throw in some wordplay, but I will do so. As you can probably tell by the presentation of this video and the information in it, as well as my inability to flick through the charts as swiftly as I usually am able to do so, I'm currently quite limited in what I can provide to you logistically. I'm on the road, I'm traveling at the moment, and so I don't have all of my equipment with me. I don't have the amount of time I usually do have to do analysis, and that is impacting the quality of the videos. Rest assured, by Christmas, I will be back to my regular routine, back in the office and back on the desktop, providing you with daily analysis at extremely high quality. So I'm trying to get all the information I can out at the moment. It's quite difficult to do so, but hopefully the information I'm giving here is useful regardless. Thank you for watching. Thank you for sticking around. I'll be back to full capacity in just a couple of weeks here. Guys, everyone needs a place to buy and sell cryptocurrency. If you're involved in crypto, not only do you need to buy and sell, you also need to hold. You need to be able to transact your cryptocurrency. That's the purpose of an exchange. And of course, exchanges get hacked all the time. They lose their customers' funds or misuse their customer funds all of the time. There's big controversy around that in cryptocurrency. So you need to be on a safer exchange. You need to be on an exchange that's not extorting you on fees. And that's why I choose Bitunix. Not only is it global, not only is it non-KYC, but it's low in fees, and it's historically been very, very safe. Not a single security breach has ever happened on Bitunix, and it's been on the market through 2 entire cycles. So check it out with my link down below. I use it personally for good reason, and I suggest you do so as well. My link is down there. You'll get a 15% lifetime trading fee discount exclusively with that link. I appreciate you guys using it if you're interested. It's in the pinned comment and description, and let's get into the content.